Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 23rd of September, 2021, and we're at about 5:27 p.m. Central Time. So an interesting day. Would you think, I'll give you an example, that the dollar sharply lower, interest rates took off big time, and the stock market up over 500 points in the Dow and another group of the indices all sharply higher? Well, that's what it is. So here's what the market did. I'll give you the quickie on it. The market said the Fed knows something. It's going to go ahead and taper. It doesn't mean if interest rates go up, these markets, the Fed has the markets back. If the Fed sees it's wrong, it'll cut the tapering and rein it back in. That's the go away from it, okay? You don't have to agree with me, but that's what I think the market is doing. How else could you explain the fact that interest rates up, energy prices soaring, that's the right word for that. We're looking at $1 down. What else could make it up? Now, Evergrande is still going on. They didn't meet that payment today, at least at the time that I'm doing these videos. Could they meet the payment tomorrow, Friday? They could. Remember the time differences, but they did not meet the Thursday payment. Time can change that. And will they meet the Monday payments they have coming up? The Chinese government asked them to meet the money. They didn't do it. So now you're forced to wonder, will there be a contagion? How big is the situation? Will China crack down on them over the weekend when you can't protect yourself? Whole group of things you got to take into account. When we look at a weekly area chart of closes, we are still down a whopping, and it's big, 0.5% for the week. You heard me, 0.5%. Now, the thing that has gone on, and we should be looking at, is this. Here's the market up, and then you lose 1.68%. Then you gain back out of the 1.68 that you fell, 1.4. Let's call it down your 1.5%, and you add to it at this point another 0.52. Any way you want to cut it for the week, you're down 2%. Not very big. Do you disagree? If you do, I don't know. I'll go back to school for the math. When we look at the chart, as we came in here, the market found its support. Now, was there a way to see that? Okay, we know we had a washout on Monday. The amount of money going out of the ETFs was monstrous in its scope. Now the market's got a new pattern of higher lows, higher highs. The market held, again, a key number, the 100-day average, and guess where it's going to fight? Right where we talked about. Now there is something I don't like, so let's cover that. The breaks here, the breaks here, the breaks here were 2-3 days in nature. Now you've got 1, 2, 3, 4 already. I pay attention to that. It doesn't go into the left ear and out the right. The market's suddenly acting weaker than that. And once it got under all this, that's the recent break. What about these that you add in? The market has changed its character. So don't think it hasn't changed its character. That's the first thing I want to go and say. It changed its character, and now the resistance is likely going to be rough at the 18-day average of closes. What did the market hold? Just as it should. It tried to hold first, the first challenge of the lower Bollinger Band, just like it did here and here. Then it started working even lower, so the next challenge for support should be the 100-day average. But if we come back here, you didn't get that far down on those recent breaks. The market played with that and finally got its rally going. And as I said to you the other day, we have an outside day up until that low's taken out. The odds favor this market's made that short-term bottom. The next resistance, the 18-day average of closes. And I feel pretty good that the market's already given me what I thought. But I am telling you, there's a different feel to this market. It's not how it feels to me. It's on the chart. That is not the same as these short-lived breaks. Got it? Momentum up, trend up. Well, let me take it this way. Momentum up, trend up, but the bias is down. When the bias is down, the trend is up, and the bias is down is because you're under the 18-day average of closes. They negate each other. A lot of noise. That's how I'm going to rate the market. What about this in the NASDAQ? Well, let's first do our forensic dissecting. Here you were a couple of days under that band. Here you're more than that. You're 3, but it's not a lot more. It's 1 more. I can't get worried about that. There's others back here, and they weren't a problem. This is not as much a problem as the S&P has. Where do you think I'm going to tell you the resistance is? You know it. It's going to be the 18-day average of closes. Is there a new buy signal that I see? No. I mean, anything you do up there, you still got to carry the risk down here. You need the market to restructure itself. But what it told you, and it told you that in this market, and it's telling you in this, you broke the patterns of lower highs, lower lows. That's what you broke. You did the same here, and in the Dow you did the same. And it didn't happen today. It happened yesterday when the market, and this was Wednesday, as the market came up, and you had the outside day up on all 3 of these, because you had outside days, I believe you did in the NASDAQ too. Yep. Until you take out that other day's low. Nah, I think a trading bottom is in, but I'm looking for serious resistance in all of them at the 18-day average of closes. So you come up, and where did you go today? I'm going to stick with what I teach. That's how I'm reading where the market's at. So the guys that sold into the hole, they're dead. The guys that bought too high back here and didn't pay attention, they got wiped out. Where are you now? In the middle of no man's land, and you should keep both hands in your pocket. It's one thing to open up your pocket, your checkbook, to buy the deep breaks on spiders, ETFs, stocks you've wanted to own on those deep breaks to those Bollinger Bands, because you're going to build positions if you believe that the bull market is still alive. In the futures contract, it is the absolutely wrong thing to do. It's one thing to cover shorts, it's another to want to get long. In the Russell, we have now cleared the 18-day average. That's fine with me. The first challenge here, and I know I told it to you as this was occurring, I said I think the pros covered their shorts, go back September 20th, said it the whole day, and now I look pretty darn good that happened. But I don't know what to do with these markets right here. They're not telling me you should jump in and be a buyer, and they're certainly not telling me you should be a seller. I think the hands stay in the pocket. When the VIX was making its move and it got up here, I said, I had one gentleman, in fact, that said, should I buy puts? You know, he was asking, or do you write calls? My answer was what I've seen the pros do. They've been writing calls each time you get up to the upper Bollinger Band, but each time it's done it, you've had a spike afterwards, okay? I can't play for that spike because all I know is the Bollinger Band. So I think the pros went short there. I said they're probably going to take a bit of heat, and boy, did they. And I said I still think you're going to pull back to that 18-day average of closes. Market started pulling in, and this is Tuesday. This is Wednesday. Voila! You're there today, okay? Now the game is on. Which way does this market want to go? If it takes out 1765, just a full point lower, you have no trend at all. So right here is where the market has to hold. From this 18 to this 100-day average, momentum is down, trend up, bias down. It's a mess. The play was to right there, cover here, and enjoy. Very difficult trade because you're watching this go against you in a monster way to not make an awful lot of money, and you're asking yourself, what the heck did I do? If you think that's not real, you haven't traded. In the 30-year notes, now you think you can do this. Okay, here's a market gets up to the upper Bollinger Band. Yesterday, go listen to my video recording here. I said that's where I think the pros came out. I think that the market will try to fight at the 18-day average. It didn't. It went right to the lower band. This is where the pros came out today from the shorts. I know you don't believe me, but that's what I think. And I still think that the fight will be the 18-day average, but I never thought it was going from high band to low band. You think it's a little bit of money? That's 164.16 to today 161.20. It's $3,000 just like that. Wow. And you're oversold. I'll let somebody else own those things for a while. 10-year note, what'd you do today? You got to that number and the 100-day average. Don't fall into this trap. This is where the pros came out. I don't see a trend. If the algos are handling that, that's what I think. And I'm looking for a bounce again. We'll see if a bigger play to the downside develops. That'll be off the weekly charts, and we'll cover that as we get into them tomorrow. I'll either put them out tomorrow night for you or Saturday. I don't know which yet. In addition, it's something that for my subscribers, you know, I'm going to do your thing, and that's where I'll discuss that. Dollar index, overbought against the upper Bollinger Band right here. What would I tell you? Out, out, out. And I know you're going to tell me how wrong I am because the market's coming back and it's going to roar on you. Okay. And today the market sinks back and I go, Now, if you take out 92, 97, the odds on trade is that the market's going to try to make a run for the 18-day average. But it's a son of a gun market. It's in an uptrend. You have the higher low, the higher high, but you've hit your upside targets. You're overbought. Embed, which it hasn't done yet, embed, I'll get a different opinion. I think traders are better off sidelined. And that's what I try to teach people. You can't be in the market every day trying to whipsaw back and forth. I've not seen one person able to do it, okay? I've seen algos. I've seen some of those computer models. You might not want to call them an algo. Try it. Some are successful, some aren't. But that's what you got to be watching for. So how I teach you, it's pretty simple. I want you to think of it this way. It's 5 steps. They're not hard. You're going to learn the first step, what is a trend? How do I filter it? If I'm filtering it, okay, what are the support and resistance within it? How do I work with the moving averages? Is there something other than Bollinger Bands that sometimes the traders go to? And how do I not learn and just see it on a chart, Ira? How do you really teach me? Well, that's what I do well. 54 videos, okay? It's about 8 hours of videos. You're going to first start in each of the chapters, and I'm going to walk you through with a PowerPoint. And in the PowerPoint, how it's actually going to work is you're going to see me draw what's happening. You're going to do the same on charting software we give you. The next thing you're going to look, I'm going to pick areas. You're going to take your charting software, go back with me. You'll see what I'm seeing. You're going to go see the same thing. And as it unfolds, you're watching it. Then every morning, you're going to join me in live. When I record my webinar, it's not live, but every morning within 20 minutes of me finishing it up, you're going to be looking at that video or during the day, and it's going to reinforce the charts today. I think you're going to get it. It's not expensive. I want to make this clear. I don't believe in taking your money per se. It's not what this is about. If you think $249 is nearly $249.95 to get 50 hours, 54 videos, and not 50 hours, 8 hours of video, not through, to get all my research, which I charge, and I have plenty of people pay me $60 a month for it, that's included. The charting software, $100 a month, that's included. My webinars and all that you're invited to isn't a good deal. There's something wrong with you. If you want to learn charting, I am not saying I'm the ultimate chartist. I'm saying I'm really good at what I do. And if you'd like to learn it, just go to our website, look under education, take a look at it there and decide if that's for you. Once you start, you'll go right through it. You can decide to buy it now, start it a month from now. You let us know and we'll get everything going for you. In the meantime, I'm Ira Epstein. Hope this helped you. Have a good day.